listening to Power Producers Shop Talk, where we are refining and redefining the sales game by equipping you with the tools you need to differentiate yourself in the marketplace.
Listening to the podcast is only going to get you so far. Why not take your game to the next level? Check out Power Producer Basecamp on killingcommercial.com today.
Tactical skills that'll help you provide deliverable value to your clients and prospects.
Want to have the sweet swag that we send out from the Power Producers podcast for your clients and employees? Check out policyt.com today.
And action items that you can provide to take your prospects and clients to the next level.
Want to create an online presence but don't know how to start? Check out crushingcontent.com. It's done for you, so all you have to do is show up.
This is Power Producers Shop Talk, production redefined. Are you ready to feel the power?
What's up, everybody? Welcome to the Power Producers Podcast. On this week's Shop Talk, we're back with Kevin Ring, lead analyst at the Institute of Work Comp Professionals in Asheville, North Carolina. Last week, we told you all the reasons why, or at least a good number of them, that you should consider leading with workers' compensation. And today, we're going to take a turn in a little different direction, and we're going to talk about the valuation date and why that's so important. So this is probably one of those where I'll sprinkle in a couple of comments, but I'm going to just sit back and let Kevin rip because that's what he's best at doing.
Well, thanks again. And so the valuation date, some people will call it the unit stat date, which I think is, probably a generation older than us. That's what people who knew about this probably called it, because that name comes from the time when insurance companies sent little pieces of paper called unit stat cards to the rating bureau. But regardless of what you call it, we think it is the single most important day of a workers' compensation policy. Well, why is it so important? Because it is the day that the insurance company or insurance companies, if the risk has had different companies over the relevant time frame, send all the information to the rating bureau for inclusion on next year's experience mod. And this includes obviously your class codes, your payrolls from the premium audit, but also all of the information about your employee injuries. And when they send that, they send not just what's been paid on those injuries, but also if the claim is still open or the injury is unresolved, they send information about the reserves, that money that is there, that the insurance company is still expecting to spend, but that it hasn't spent yet. And so just to make a simple example to illustrate what I'm saying, if you had a $100,000 claim, and there was $1 paid and $99,999 reserved, that $100,000 claim will have the exact same impact on the mod as a closed claim where $100,000 has been spent. And so what we're concerned about is these open claims, when they get reported, are those reserves accurate? Should the claims still be open? But before we dive into that, I think we got to talk about when the valuation date is, because if you don't know when it is, then you're not going to know, when to take the steps that we're going to talk about. So if you talk to somebody who knows about the valuation date, what they'll probably tell you is that the valuation date is 6 months after the renewal. The technical definition of the valuation date is 18 months after inception and then annually thereafter. And it can get reported by the insurance company for up to 10 years if there's still open claims. But we're only concerned with the first 3 reports because those are the ones that are going to go on the business's experience mod. Now, if a policy runs a full 12 months, 18 months after inception and 6 months after expiration are the same time. But if you had a policy, say, that was written January 1st of 2025, and then you canceled it today, in the middle of April of 25, the valuation date for that policy is still going to be in July of 2026 and then 27, 28. It doesn't go 6 months from the middle of April because that's when we canceled the policy. And that can be important to know if the business does change their effective date for whatever reason. Also, if you have a business where there's multiple different maybe businesses on the mod, or sometimes you'll have situations where a company operates in multiple states, and because of issues with insurance companies, you have different policies with different effective dates. The policy effective date, and only the policy effective date, drives the valuation date. The effective date of the mod is not relevant. Now, in most situations, the effective date of the policy and the effective date of the mod are the same, and so those things feel connected, but they are not for the purposes of this conversation. Also, while we talk about the valuation date as a day, the rules for the carriers allow them essentially to take this snapshot picture of the business's information anytime during the 18th month after inception. And so for that reason, we always recommend, as we get into kind of what the process is to help with the valuation date, to think about your target being the first of the month. Even if a business renews on the 15th or the 8th or whatever, you want to think about trying to finish this by the first of the month that their valuation could happen. Because insurance companies, all of this stuff is transmitted electronically, and they will batch their reporting. Everybody with a valuation date in April gets sent on the same day. And once that information is submitted to the rating bureau, there are very, very few scenarios where the insurance company has to go back and revise that information. So we don't want to miss that deadline, because if you get a claim closed out on the 10th and then say, hey, great, now make sure that gets sent to the rating bureau, and they say, oh no, we already sent it. Well, it's great that you made that happen, but it's not going to impact their mod for another year after their next experience mod. So having said all of that, anything you want to jump in with before I talk about the process?
The only thing that I would add to that is, if you're an agent in Florida or a state where you have carriers who offer a dividend back on the workers' comp, I think a lot of the times when you look at those quotes, you go in and you want to sell what it would be for somebody if they have a 0% loss ratio at their current premium volume. And that's usually a really large number. And the reason why is because the carrier's pretty sure they're not going to hit that. But if they do, they don't mind giving them the money, and they're still profitable as well. But, it reminds me, in understanding valuation dates, that kind of also ties into when the dividends are declared, and the ultimate value of the dividend based on your loss ratio from the policy period that's affected. I think too many times, agents will go in and they'll sell those programs, but they don't take the time to explain to their client exactly what's involved with it, when it pays out, how things are valued, whether or not there's a recapture provision, and all of those other things. So I realize that's a little random based on what Kevin was talking about, but that's how my ADHD brain works. And it just seemed like a normal time to say, hey, if you're selling policies that have dividends, probably need to know a little bit more around the valuation of those and be able to articulate and explain them.
No, that's a great point, and I'll expand on that, because being more proactive at the agency level in terms of helping your clients with workers' compensation can be very profitable for agencies. Even in where most states don't have dividends like what you're describing, a lot of carriers do have profit sharing, and when you can help your clients be more successful in workers' comp, then that can come back to reward the agency down the road as well. So talking about the valuation date, so it's 18 months after inception, probably 6 months after expiration. And the process that we're about to talk about, we're going to encourage you to start this 90 to 120 days ahead of the valuation date. And that's not because it's going to take you 3 or 4 months of full-time work to make this happen, but rather because it takes time to have the conversations and to collect the information that you're going to need to collect to make this work. And what we're talking about here is what we kind of think of as level 0 of in-agency claims management. If your agency has people on staff, or you outsource people that are working with workers' compensation claims, on a day-to-day basis and managing them, the valuation date is going to be a much smaller event because they're effectively doing this same work on a day-to-day basis. But most agencies don't have that capability in-house, or you're working with a vendor that only really deals with these sorts of issues with claims over a certain dollar amount threshold. So it starts with you, the producer, getting your hands on currently valued loss runs. And what we're looking for on those loss runs are the open claims, the unresolved injuries. Most loss runs, have a field on them that says, open or closed. So that's easy to see. If you have some really crappy loss runs, and David, you and I have talked about, the inconsistency and lack of quality in a lot of loss runs. So you will occasionally see a loss run that doesn't say open or closed, but you can identify open claims also, anything that doesn't have all zeros in the reserve column. Because when a claim is closed, the reserves have to be at 0. That's the definition of a closed claim. But we're only looking for the open claims. The closed claims, could they have been less expensive? Maybe, but that money has been spent. There's nothing that we can do about that. And another thing to point out when you think about these open claims is that when we talk about this process, it can sometimes feel overwhelming to folks that it's going to be such a dramatic amount of work. But if you think about your best accounts that you want to keep for life, how many injuries they're having on an annual basis, and then how many of those are still open come valuation date time, it's probably not a terribly overwhelming number. So don't let that bog you down. So we identify those open claims, and now we're going to turn around and get on the phone with the claims adjuster or the claims adjusters, as the case may be, depending on the insured. And this conversation is really quite simple. It's just, hey, I'm having a meeting with my client next week, and I wanted to get an update on these injuries. And the adjuster should know the current status and what the plan is from the day of that conversation until the claim is going to close out. And adjusters, I've heard from agents for years that adjusters don't always react positively when you get involved in this. But the way that we think about it is being a claims adjuster is very, very difficult, and claims adjuster workloads are not going down. And when an adjuster calls a doctor, they're going to leave a message like we all do, and they're going to set a reminder to call back in 30 or 45 days. And there's just rinse and repeat until they get a call back with the update. And what we're looking to do is not to argue with the adjuster, not to try and supplant them, but rather to help them get the information that they need. And so if the adjuster can give you the plan in writing, if they can send you an email, that's fantastic. But at this stage of the process, just taking your notes on what they're telling you is perfectly sufficient. So they might tell you that, Sally, has a knee injury and, she's waiting to hear from the orthopedic surgeon if she needs surgery on her knee, or if she maybe just needs physical therapy to recover. And David has a shoulder injury and he's doing physical therapy, and we expect him to be, released back to full duty in the next month or two. So, okay, great. So we take that information and now we set up a call or a meeting with the client, and we tell them what we learned from the adjuster. And what we're looking for in this conversation is, are there details or information that the adjuster shared that don't match up with what the employer is seeing on the ground? So, the employer might say, oh, well, Sally just came in yesterday and said the doctor told her that she doesn't need surgery on her knee. She's been released back to light duty and she's just going to be doing, physical therapy for the next 6 weeks. Or, David actually got his full release last week and he's back at his full duty job. Okay, fantastic. Well, we can't turn around right there and just call the adjuster and say, guess what I just found out? We're going to need documentation from the physician in this case. The employer might have that work release that David brought back saying he could go back to full duty work. We might have to help the employer get in touch with the doctor about Sally's knee with some sort of documentation that she doesn't need surgery. And this is one of the places, probably the most important place that we're helping the adjuster. Because like I said, they're going to call, once every month or so, and the employer can call that doctor every single day if that's what it takes to get the information. And so once that documentation is collected, then we can set up another meeting with the adjuster and say, here's this document for David's shoulder and Sally's knee. And at this point, hopefully the adjuster will say, okay, great. Well, David's shoulder is all taken care of, and we can close this out. Or, maybe we need to wait a couple weeks to see if there's any other medical bills that come in. And I'm going to remove the reserve that we had for the surgery for Sally, and any permanent disability benefits we thought we might have to pay after that surgery, and that's what I'm going to do. At this point, if the adjuster tells you that they're going to change something about the value of that claim, that is something you need to get in writing, because if the valuation date comes and goes, and then that information has not been changed the way that they said it would, well, that's a clerical error. And that is something that the carrier is going to have to fix, barring there being some change in the facts, in the meantime, Sally winds up actually needing surgery or whatever. But if the adjuster doesn't make that change, then we can go back later and say, listen, here's the email where you said you were going to change this and it didn't happen. We're going to need you to fix that. But if you don't have it in writing from the adjuster, you're never going to win that fight saying, oh, well, I remember on the phone call they said this. That's never going to win the argument. So we got to get that in writing. And then on or very near the valuation date, we're going to pull another set of loss runs where we should be able to see that any changes that were agreed on were made. Now, in this process, we are not encouraging you as a producer calling an adjuster and arguing about, oh, you've got that shoulder surgery reserved for $50,000, and I saw online it only cost $25,000, or something of that nature. That is, unless you happen to get into the insurance business after a career in the medical field where you have that kind of of knowledge, that's not what this process is about. It's about filling in the gaps that the adjuster can't fill in themselves, at least not in the timely manner that we need to make sure that your client's experience mod is exactly what it should be and doesn't have that extra money in the reserves being reported for things that just aren't going to happen.
I actually had an adjuster tell me they're not allowed to talk to me about claims. Like an ongoing claims problem. The client reached out to me, and look, like I get it. Adjusters are overworked in most cases. They've got a difficult job. They're not dealing with people who are happy to be talking with them in most cases. I mean, it's miserable, right? I get that part. But we had a claim that was not being handled correctly, and it was obvious that it wasn't being handled correctly. So I picked up the phone and said, hey, I just want to find out what's going on with this. They said, I'm not authorized to speak with you on this matter. And I'm like, I'm the agent on the account. What do you mean you're not authorized to speak with me on this matter? And the guy like literally dug his heels in and refused until I emailed somebody who told him he was authorized to speak with me on that matter. But, I think it's interesting, man. Agents need to your point, agents probably need to give a little bit more grace with adjusters because they don't really understand the workload. It's not the same thing as what we do. But at the same time, my message to any adjusters out there would be don't pick up the phone every time an agent calls, assuming that agent's going to be the same way as every agent who's ever treated you bad. There are people who get that you have a rough workload. We get that you sit in a desk where, you're typically dealing with people who are in pain or they're mentally, having mental trauma, maybe not quite trauma, but, they're not in a good headspace when you talk to them. And sometimes you don't have answers because you haven't gotten called back by doctors or anybody else. So, I would just, my 2 cents would be keep the lines of communication open because your job's not going to get any easier when you're trying to put resistance out there. And my advice to agents would be, if you do have to reach out to an adjuster, reach out from a place of education and willingness to help, not necessarily being accusatory or assuming everything that's going on. Not every system out there is created equal. We have carriers who have excellent systems where we can go in and drill all the way down to every check that's been issued, all the adjusters' notes. Like we really do know what's going on. And if they tell us we don't, it's then maybe they haven't read their own notes in the system, because I don't ever pick up the phone to call somebody unless I've been through all of that stuff first, so I'm up to speed. The other thing is, we use Zenjuries for a lot of this stuff, so I'm not even getting involved in claims at pretty much any level at this point because they're the ones that are kind of quarterbacking the claims process for us across all of our lines that they handle, and that's been a godsend for us. I mean, what Jess has built over there has been incredible because now, for me, it's great. I get a push notification when there's an update. I can read it on my phone, and I'm golden. Okay, good. I see we're making forward progress here. Or we get alerts when things aren't moving like they're supposed to. And I know that maybe I need to get a little bit involved in that at that point. But, I say that because I think a lot of agents out there probably really don't even know what their role needs to be in a claim. Do I get involved? Do I not get involved? If I do, how far do I get involved? And the other part of it is they probably, let's face it, agents, we might think we know how the claims process works, but in reality, we don't. Unless you've sat in an adjuster's desk before, you don't understand how the timing works and everything else. And I mean, I'll give you guys a great example as we wrap this up. I didn't realize, this is going back a long time now, but I didn't realize that when a settlement came out from a carrier that it's often, if not always, put under the indemnity provision of the policy. So we had a guy that we got back to work, even though he had some chemical burns, and we were ecstatic that we were going to get the 70% discount on the medical because we had it inside the split point. Everything was contained. But he was able to get a settlement on the injury. And guess what? Even though we had terminated him, look, okay, we've got enough time. We're going to have to push another recording session, but we have enough time I can explain it. This is a guy that worked for a plumbing company that was a client of mine that went out to work in the company truck on a Sunday when he was off. He was not scheduled. There was not a job that ran through dispatch. Somebody he knew that owned a restaurant over in Pinellas County on the Clearwater side of the bay had a problem with their walk-in cooler, and they wanted him to go over and do some of the HVAC work. Now, number one, my client did not do any kind of walk-in cooler work whatsoever. They did residential HVAC. That's it. Number two, this was nobody called in, dispatched him to go over there. There's no record of the person ever calling the company, him being asked to go out. In fact, he reached out to call the owner of the company to ask if he could give terms to this restaurant specifically. And the owner was out on Sunday off and said, no, we're not. Number one, I don't give terms to anybody. And number two, you're off today. You don't need to be going and looking at any jobs. Take your day off. This guy disregarded that. He goes out. He doesn't know what he's doing because that he's not into refrigeration systems, and he ends up getting chemical burns from the Freon on both of his hands. Okay, so all kinds of things going on in this thing, and he ended up going to the emergency room, and he had to have some stuff done. I don't even remember if he had skin grafts or what, but ultimately we got him. We got him back to work, and then he quit. And then, obviously here comes the letter. And so we ended up going, and I went to the hearing for this, the mediation and everything. And the carrier agreed to just settle it to make him go away for like $10,000 or whatever. Well, I was pissed, man, because number one, I didn't think the guy deserved a dime. All the circumstances and all the documentation we had pointed to it. They said, well, if the owner had a recording of the phone call, I'm like, come on, man. At some point, we have to be logical in all of this, And the guy did not disavow anything that we said, right? So I find where I really lost it is when I realized that now this 10,000 went on to the indemnity portion of the experience mod. And this is a mod that we had worked really hard to rehab. And that one claim, made it have an uptick of a few points again. And so I tell you guys that because you need to be paying attention to these things. I know some people out there, try and advise clients to keep people on payroll, if it's going to be out a week or two or whatever, as opposed to actually running the claim through the normal process. While you may think that you're going to be saving your client money from an indemnity claim being on the mod by doing that, the reality is you very well may keep the payroll dollars from being on there, but you could have them, end up bankrolling payroll that the carrier would have paid, only to end up with an indemnity claim and a settlement on the mod, and everything you advised them was going to happen goes right out the window.
Yeah, well, and that's a great point as we wrap up, is that agents learn and appreciate about the 36 or 38 states where you get a 70% discount on your mod if a claim is met only, and they tell their clients that, and it's really, really important. Sometimes the clients will hear that, I need to keep this met only at any cost, which first of all is not right. Is, some claims just need to be indemnity. But, in a similar vein to your story, we had an advisor who had a trucking company. Truck driver hurt his shoulder, couldn't drive a truck for a year. And they thought, oh, we'll keep this med only. They paid this guy for a whole year. And then claim closes and there's a permanent disability settlement, which, as you were saying, goes into indemnity. And they were mad, as they would be, because they thought they were doing this magic thing to keep the claim med only. Remarkably, the carrier actually agreed to reimburse the money they would have paid had they been paying indemnity during that year, which I don't know if I don't think they're required to do that. I think they just kind of did a favor. But there are right ways to keep claims med only, but just paying someone for an indefinite period until they can come back isn't the right way. And when you have extended indemnity, the longer it goes, the more likely that there's either going to be a lawsuit or a permanent disability payment at the end that's going to spoil the med only claim, even if you've done all those things.
So here's the moral of the story, people. If you know anything about me or have listened to the podcast, you would know that if I was irritated, that I wasn't going to settle for that. So I went back to the carrier, and actually to the president of the carrier, who I had a relationship with and still do, and basically just said, look, you guys made a bad decision. Here's the facts. He looked at it. He agreed with me. And I said, what are you going to do to make it right for the client? And he said, what I'm going to do is we're going to cancel this policy. We'll rewrite it back to the retro to the original effective date, and I'm going to bump them up 2 tiers on their dividend plan, and I'll make it a little easier for them to get money back based on how the dividend actually pays out based on loss ratio. He said, and I will guarantee you that plan for 3 years. So guess what? My client actually ended up making out on the deal because yes, the mod went up and they paid more premium, but they actually qualified and received much larger dividend checks as a result of that. So I'm not saying that you have to argue everything and take, be willing to, not take no for an answer. But if you feel something's wrong, don't be afraid to take it all the way to the top, because there are creative ways that the carriers can fix problems if they're motivated to do that. And, this is back at a time, we're probably talking about 7-8 years ago. So there was no podcast or anything else that, I would have gotten on and talked about. Not that I would anyhow, but it was because the guy realized, what, we mishandled this. We didn't do it the right way. Here's how I can't not pay it under indemnity because we get audited on things like that. But here's what I can do. And because he was willing to be open to have the conversation, and because I was open-minded and gave him an opportunity to fix it, my client actually ended up in about as good a position as they could based on what happened. So always push until you can't push anymore. So I'm going to go ahead and wrap up now because we're coming up to the top of the hour. We're going to get into it next week. Kevin, anything you want to add before we go?
No, just thanks again. If anybody wants to get in touch, you can send me an email, kevin@iwcpro.com. Phone number is 828-274-0959. If you have a question about workers' comp that you're struggling with, don't hesitate to reach out.
The other thing is, I don't know if y'all are onto my tricks yet or not, but I take the transcription of all these podcasts and I turn them into blog posts and I put them on the website so that if you want to go any deeper into this, check out killingcommercial.com. There will be a topic or a blog post on each one of these shop talks we do. I'll drill down a little bit further and I'll make sure that we have Kevin's information in there and link back to him on every single one of those as well. So thanks again for listening. I hope everybody has a great weekend.